Welcome everyone to the Kendall Report. It is Tuesday night and Monday night for Tuesday, and we have a holiday today, President's Day, and probably the only country in the world that runs better when the president's out of town. So I guess when you're, I'm just going to leave that one alone. I'll let you folks do what you want with that. Anyway, welcome. There's a fair amount going on this week. It's a short week, but lots going on. We've got GDP coming out. We've got PCE numbers coming out on Friday. We actually have quite a few. We have 1,216 earnings reports. So let's kind of get into it. Before I do, make sure you hit that like button and the subscribe and the notification bell. And so let's get into tonight's broadcast. So on Tuesday, tomorrow, we have existing home sales expected to be stables. And I talked about this a little bit and make a couple comments here, as I believe that the housing market's already starting to stabilize here. And I do finally have the ability for me to draw in what I think's going to happen with the yield curve. I finally got the app updated to give me an extra day to mess with that. But I think housing's really starting to flatten out here. And I think prices are still having a little work to do before they're completed. But I think activity's starting to flatten out here, and I don't think it's going to get much worse. I don't believe there's any kind of collapse in prices or anything like that coming in another 2008-9 type scenario. On Wednesday, we've got the minutes. Probably we'll have some interesting things going on there. See what the FOMC minutes happen. Last week we saw just a couple, like I guess they always have a couple talking heads and Fed non-voting folks that go out there and start to. Bullard's always the candidate for that. Go out him. He's a hit man go send him out, talk to media, and see if he can shake things up. So as I've been telling you forever and ever, the Fed's going to keep on this talk about keeping rates higher and for longer. And I think I'm going to go into that a little bit tonight here in just a few minutes. So we'll get the FOMC minutes on Wednesday. That's pretty much it. Thursday is the big day. GDP expected, this is the final for fourth quarter, 2.9%. It's kind of hard for those folks that are looking for the recession to kind of come up with the recession numbers. I think probably Q1 is a little softer. We'll see how that starts to come out. The deflator is also coming out, which is expected to be at 3.5%. And then also on Thursday, we got claims 203,000, and we've got continued claims 1.696 million. And I think that number could creep up a little bit. We are starting to see some more weakness in employment, but really what we're seeing, it's interesting in employment, and I'll talk about this probably over the next several days, is really what we're seeing is a rotation. I mean, people are moving from one area to where one sector is starting to soften, another one still, there's demand there, and depending on the location of all these folks, they're able to kind of rotate the employment a little bit. So it's not getting the type of negative effects that you would think. And like I've talked about many, many times, is, this whole concept that, by the time we get into summer, we're going to fall off a cliff and everything's going to come to an end and all that stuff. I see some noise with people talking about what Russia's threatening to do. I mean, they had their opportunity. They could have taken, I guess they could have started World War III by taking Biden out of the air if they wanted to do something like that. I don't think that's going to happen. And, we'll just continue to kind of watch this situation and see what unfolds. On Friday, we get the PCE prices coming out, and they're expected to be up 0.4. So all of these numbers are coming up a little bit from the previous month. Year over year is 4.9. And I think just on general, I'll just make a comment right now. I think all of the inflation numbers are going to stay well above 3 to 4% and maybe even migrate back towards 5. That's why these interest rates are not going down anytime soon. And it's also why they're probably not going to have a lot of effect on the economy right now. I know a lot of folks disagree with me, and that makes me feel good. So this is basically, I'll break this down a little bit when we get into the yield curve tonight here in just a few minutes. So let's take a look at last week. S&P was the only negative index. It was down 0.3, but we were still up 6.2%. And NASDAQ was up 0.6, up 12.6% on the year. Russell up 1.4, up 10.5 on the year. And I'll just say that it looks like there's still a lot of positive rotation, not necessarily just into the FANG type stocks, but the higher capitalization of the NASDAQ seems to be attracting a lot of cash flow right now for whatever reason. I think that's sort of interesting. So let's, before I get into some other thoughts here, let's look at the earnings reports coming out. There's 178 on Monday. Nothing looked very material to me. Tuesday, 194. We got Walmart and Home Depot coming out. Wednesday, we got 309 NVIDIA and Rio Tinto, maybe some mining. But there's other companies, but they're all secondary companies, which I'm not discounting them. What I'm saying here is I'm not expecting any kind of big move triggered by any earnings reports coming on, but they're worth mentioning. 438 on Thursday, we got BABA coming out. Intuit were the two top capitalizations, and just a lot of other stuff that are laying out there. And then on Friday, we got 97. Berkshire Hathaway is the only one worth mentioning there as far as high capitalization. So let's talk a little bit more about just a little bit expectations, the FOMC meeting minutes. Don't see anything there, and I'm going to put a but on here. But this, you know, if you look at the reaction we had to non-voting members, somebody might parse a word or two out of there and try to stir up a scare. You'll see as we get into the technicals here in a few minutes, there's still some minor potential for the downside to test some of these support levels. And like I said, I'll go through all those details here in a minute, but I just don't see anything material there. I think as we come to this week, most of the stuff will be on Friday PCE prices. If there's any surprises there, maybe they can move the needle a little bit there. But I think we're probably looking after last week, CPI, PPI, and all that stuff. We're probably going to see some stability from that standpoint. So we'll just kind of go with, we'll push forward with those ideas in place. So let's take a look at the Wavetech database. There is plenty to talk about there. So let's go ahead and get into that. So I'll start off here. This is the big number, folks. I've been talking about this for a while. I'll go through a number of details, but we are at 69.49% bullish on our intermediate database. I expected it to tick up a bit, but we got some pretty good numbers here. We got 1,988 new buy signals and 116 sell signals. On the short-term database, I'm not even going to bring that up tonight. I'm going to stick with the intermediate because this is substantial. And I think I'm trying to always try to find the best way to put this forward and what it means, at least in Bob Kendall's world, and why this is so important. This is a very forward-looking report because there's been any big rallies, big bullish mode, anything to trigger this thing. It's not like the market rallied, now this database is buying. No, what we're seeing here are tons of patterns setting up and bottoming patterns that are turning into trends. And I'll just come up on the screen here for a second, I'm working on, I got a lot of stuff done last night. I went to bed about 1:30 working on part 2 of the article. So if you haven't signed up for the Substack, get that. Go to kindlereport.substack.com. Part 1 is out of the PPM article. Part 2 is getting very complicated, but I'm going to be able to meet my goals. I would like to, if I can finish it in the next couple of days, I will. And I think you folks are going to like that. The way it's going to go, part 1 is philosophy and some details. Part 2 is really digging into some of the exact signals and things that come out. But part 3 is the big one where I'll do trade setups and those type of things. So, and ultimately this whole series is going to get turned into a video for YouTube. So that's coming down the road. But I just wanted to mention that because this is big. But this whole thing, and the reason why I bring all of this stuff up is what's happening here is something unique. And let me go back full screen. And you folks have seen this. I just want to bring it up again, is that really what this chart is showing you, we're basically approaching this 72% peak. Now, it may continue to get more traction as we go down the road. I know I'm sure a lot of folks just don't want to believe this whole scenario, but this is what drives my analysis, and especially when I start looking forward to expectations. So what typically will happen sometime, we'll probably get a little more traction over the next several weeks. When the database peaks, we'll start to see some of the trades that started to come on going back to October and November and some in December. Some of those will start to roll out, and we'll see the database over the next several months start to decline. But what happens is you can see the second cycle profits, which we are getting into now, everything that came in after we went over 42% is what's going to drive the markets forward. And I've been talking to you about the secondary stocks and those type of things. That is very significant. That's what's going to drive us as we go forward in this pattern. So I keep showing you this particular chart because the database is forward-looking, because if any of you that use Wavetech or PortfolioXpert, you know this already. We have a map that shows what the holding periods are, what the expected returns are, all of these things. And it's on every symbol in our database, all 16,000. So if we issue a buy signal, we give you a forward-looking concept of what the holding period might be, as well as what the returns are likely to be. Doesn't mean they're going to happen, but I can tell you from experience that 60 plus, maybe 70% of these symbols are going to end up to be profitable. Some more than expected, some less than expected, but there will be a lot of profitability in these symbols going forward. We've already seen it. If you go back to when the short-term database got long back in October of last year, we've already seen a whole lot of stuff off of this low. I mean, we went from, maybe it doesn't sound like much, but we went from 3502 up to 4,200 last week, and now we've stalled. And when I go through the technical details, you'll see that we basically have flattened out a lot of positions and things from an index standpoint. But this is so much more beyond the indexes. I'm just hoping that when I talk about this every night, that you folks are getting what's going on here. So this is a pretty classical pattern that sets up. There's also one more thing that I'll go on about this, is right now the optimized daily model. So this is on the overall database, is the holding period's 205 days. As we look at things at the moment, the current duration is only 31 trading days. So we're looking at a month and a half is the average duration. This never gets to 100%. It gets to 70% plus, sometimes as much as 80%. But what this means is that there's a lot of forward-looking returns that are likely to come into these markets. And we've already seen, like, our average portfolio in our database right now is up about 9%. I believe I looked at it yesterday. It's up approximately 9% on the year. We've got stuff up 14, 20% in some cases on some individual stock portfolios. But for the most part, we're seeing a lot of positive forward looking already. Like I said, the NASDAQ's up 12.6, so it's no big deal that we've got these portfolios up this at these numbers. But this is, folks, I'm looking at the calendar here, it's February 20th. And, we're already talking a 12% return. And so I know a lot of everybody, not everybody, but an awful lot of folks have negative expectations for this year. I just don't see it. And these numbers that I'm talking about right now are going to carry us forward into at least into early Q3 and possibly beyond that, because a lot of times we'll see somewhat of a rotation from that standpoint. So let's go ahead and get into the technicals and get through the rest of the broadcast for tonight. All right, we'll start with the hourly S&P as always. It looks like we've got at least a couple more hours of downside here. I'll show you the market grid in just a minute. But what we're seeing is we're already printing around S1 right now. We may see an S2. I'll go through those numbers here in just a minute. But this is the hourly. Hourly, once again, seems that those of you who've been hanging around for a while, there's this thing about an hour to 2 hours before London open and about 2 hours after. And then about after that, we get the early New York crowd coming in. So they'll start to come in probably around 3 to 4 a.m. Eastern time. You'll start to get another round of traders and some early folks. And please, I've mentioned this in our live room the other day, but watch how we get these reversals as we come into the U.S. Open. So if you're trading down into the U.S. Open, we always seem to get that opposite reversal spike for at least the first hour or so. But pay attention to those patterns. And those of you that have the indicators, you should be able to see this in the algos. The algos are suggesting that we're going to try to firm up a little bit, but there's still a negative push to the downside here. And everybody's kind of coming back alive after the holiday here in the U.S. So we'll see how this thing plays out right now. There is some Fibonacci projections just below here, 4070, 4065, 4062. So let's go over real quick and let's take a look at the market grid for today. And what we're looking at is S1 4065. We've had a low of 4067. I've been talking about this 4050 area. We bounced off of there on Friday. We got down to 55 again. We tried to rally back up to the 4100 again, but we just keep getting these little bounces out of here. And I'll show you when I go through the weekly algos and everything here in a minute. But it looks to me that we still have some pretty decent support at 54. There's extreme support, I'll show you on the weeklies, at 4014. I don't think it will get challenged, but it certainly is in the probabilities, because you'll see here when I go through the algos on the daily, there's definitely still some potential downside here to push down and test some of these lower support numbers. It doesn't look like there's going to be enough of a push to get through, but anything's possible. And you can see right here, we actually got an exit on that trade. I've talked about this trade. It came on at 39.14 back on January 10th. Well, that trade got exited at 40.83 on February 20th. This was just recently exited. So we're flat on the model standpoint, and everything looks like we're still in this sideways range, just trading above these moving averages. So let's go. So my expectation for today is we could have already satisfied the low. There's a potential to retest that Friday's low at 55. That would be an S2 hit. R1 40.86, R2 41.97. These numbers are pretty tight, and what's happened primarily because of the holiday that's in here is we've seen a contraction of the daily ranges. So we typically will contract before we make a big shift. So watch these RTX, STX numbers. They're going to be fairly substantial over the next couple sessions. Let's go over to the daily chart here on the S&P. This is daily. There is 4038 is low target 1, which is a fib target off of our Wavetech Fibonacci targets. So there are 3 targets here: 4038, 3982, 3947. That would put us all the way back to the 200 period moving average. That there are probabilities for that to happen, but it looks like that we have probably one more day of downward pressure coming in, and we should hold around this 40 period moving average, which is 4012. There's a Fibonacci number there from the market grid right at 4014. So there's a cluster at 4012. We've actually printed down there a couple weeks ago. I think let's see if I can find it here. Yeah, low was 4007 back on the 31st. I'm sorry, the 23rd of I'll get it right yet, on the 31st of January. So that was the last time we printed down there. So there are some fib targets on the downside that are valid, and we do have the algos suggesting there's some downside into these numbers. So the key number to watch here is going to be that 4014, 4012. We take that out, then there's a whole nother rotation downside, probably seeing 3982, 3947. Now, I just discussed all these buy signals, and people are going, Bob, wait a minute. How could your models be buying when you're talking about the indicators being lower? Well, there's a whole lot of difference trading individual stocks versus trading indexes. So that's the reason why we're seeing, like I said, a lot of new trends evolving on that level. So let's go over and take a look at the weekly. And this is where this number is going to show up again. The 10-week moving average is 40.14. This is something else that's important to look at, is the PPM1 is at a plus 0.48. Right now, there's only about a 30% probability for the market to close on a weekly basis below this 40.12, 40.14 area I just discussed. So there's some, this is what I was mentioning earlier, there's some very heavy support from there. Bear with me 1 second. I see our friend Levi's hanging around. Okay, so all right, so looking at the weekly, I think this is a key number to pay attention to, and ultimately it looks like there's still 2 to 3 weeks of upward pressure, but it's going to unfold fairly slowly this week, maybe toward the end of the week. If we look at some of the grid numbers here, you'll see over on the right-hand side, we're looking at R1's 41.23, R2 41.64, S1 51, there's another 40.50, S2 40.10. So we have numbers at 40.10, 40.12, 40.14. So there's a really solid support there. Plus we have the PPM 1 on the weekly telling us that there's very substantial high probabilities that will hold this level. So watch that area really closely as we go over the next couple of days. All right, so we'll go backwards on the NASDAQ. We'll start with the weekly. And this is interesting because I mentioned this last week. And we have this fib targets on the upside, 12,608, 13,313, and 13,751. The algos are also suggesting that we have at least 2 more weeks upside, possibly testing some of these numbers here. The R1 is 12,561. We're printing 12,000, the high 417. So if we look at R2, 12,753, I'd watch those numbers on that level. Let's go over and take a look at the daily. And this is classic. So we look the same on the daily, where it looks like there's still some downward pressure. We're trading right on key support, 12,371, which is the 21-day moving average. And it does appear that there's a good chance for us to trade under that level. There's not major support till we get down to about 11,800 on the daily. So there's some leeway. Like I said, these indexes have some move to the potential for the downside, but I'd watch these values here on as far as the daily goes. Yeah, looking at the Russell has same kind of configuration to a large degree. The 10 period is rolled over. We also have some downward projections here. The low target 1, 1932, 1900, 1880. So Sorry. So this whole pattern is sitting here. We're rolling a little bit. I would say we stay within the market grid here. Let's go over to the weekly very quickly. So we're looking at fib target 1 on a weekly at 2,000. I've mentioned that number a number of times. We actually printed up there. We got to 1991, and then the previous week we got up to 2016. So we printed in there, and you can see the market grid on a weekly is up. We also have 0.89 on PPM1, and that value is right now at 1885. So there's major support in here. So like I said, I think if I had to summarize this particular pattern that we're dealing with here, is that all of the indexes look like we have a couple days down into some of these support levels. I think the key one to watch will be that level at that 40.12, 40.14 level. So just expect that to probably be challenged, and unless we can trade on the S&P well above a 4140 level, we're going to stay in this very choppy range with a downward bias for at least the next couple of days. And I'll update this tomorrow night as usual. All right, next we'll cover the treasuries, and I will go through the yield curve tonight just so I can show you what my expectations are. This is the weekly treasury. We still have some upward bias, but we're likely to stall in here. We printed, although closed at 382. This is right at the extreme, and we should see this cap off in here. I'm going to flop over to TradeStation for just a minute, because it will give us, let me get to the weekly on the treasuries so I can get the upper end of the range. So R1 is 388, R2 is 394, so there's still some upward bias, so we could print probably an R1, maybe look at R1, the potential for an S2, so we'll probably have a little broader range, especially since the FOMC minutes are coming out, PCE and some of the other reports should maybe affect some of this movement here, but we'll probably see a little more volatile week here from that standpoint. So let's go ahead and let's talk about the let me just talk about the yield curve here really quick, because I think that this is basically how it's plotted right now. Is we're right around 5% Fed funds and coming down. It's just right up at that top range, and while it's still inverted, the inversion is becoming less and less, and this is what I'm expecting. I'm expecting to see the terminal rate on the Fed funds to be somewhere up between 5.25% and 5%. So then this is kind of what I'm expecting it to do, is almost be completely flat in a range here, and it's still the same slope, but it's just going to move up in as far as the range of rates going. I don't see any normal curve that would suggest we're going to go up and on the back end. That's not going to happen. What we're likely to see, though, is just continued more of a flat. The back end should start to turn up a little bit, and I believe this is something that we're going to be looking at for a while, folks. I don't see us coming up with where all of a sudden they're going to start dropping these yields down into the 3 handle and those type of things. I don't see that happening. And that's primarily because, as I mentioned a few minutes ago, you got PCE, and almost every inflation is going to stay 4+%. That's good. That's not going to go away. So just expect to see that continue from that standpoint. So let's go ahead and take a look at, let's go ahead through the rest of the show. We'll go through to crude oil, and we'll be done here in just a few minutes. All right, crude has been in this sideways range. We do have some downward projections. I'll mention them just because I remember when we were over here, I didn't think these were very realistic. And as it turns out, we traded down into fib target 2 over here, which was 71.76. We got into the low 70 handle. Didn't think we'd do that. And right now, the fib targets on the bottom side are suggesting there is some potential for $59. You know, anything's possible. The algos are showing that we're going to get some weakness. This is the weekly chart, that there is some more weakness. I'm still in the opinion that we're going to stay within the weekly market grid, which right now I'm going to say S2, R2, which is 80 to 73. I don't see us breaking down into the 60 handle. I think we just trade in this sideways range, and we hover around this 70, 78, 76 level, which would put us right around the 10-period moving average. This is a weekly, and a possibility of trading back up toward the 21, which is the 80 handle. So I just see this as a complete sideways trading range. Don't see what would cause this to come down. I know they're still dumping the SPR. Maybe that's a possibility. They're going to get it down, and maybe these are maybe the administration is the best oil traders we've ever seen. They sell it down and then buy it back at $50. That would be brilliant. Have to give them that one if they could pull it off. But that's what the metrics are telling us right now. As I look at the projected numbers, I don't see that as a very realistic at the moment, although there is some downward pressure that looks like it's going to continue to unfold. So we will see probably a re-challenge of 76, 71, something in that range. Next, we'll cover gold. This is weekly gold. There's still some downside here. The key number right now is going to be around 1,817 and change. But you look at the market grid right now, we're looking at S1, 1835. So far, we printed a 46.56 range. And the question is, as I look at the algos on the weekly, looks like they're going to stay above their first, second derivative. So that suggests there's going to be some clawing back, I think, at least trying to get back toward the 1865, 1875 level. We'll see how this thing trades over the next several days, but it does look like there's some potential downside. What's going to keep the market from collapsing below this as we go through the weekly 21 period moving average, we're looking at the range of 1789. It's going up about $10 per week, so that'll be around 1810 and so forth over the next couple of weeks. I think probably the ultimate downside is between the 21 and 10 period moving average, and we're going to need to close back above the 10 to get the market grid to turn up. Right now, market grid's still biased to the downside, and it looks like there is some potential the way the algos are switched right now. But once we get a couple more weeks of prices in here, the algos could change their tune. PPM2 is actually very stable. PPM3 is showing that it's turning up. So what's really going on here is we're setting up this next consolidation pattern, and the extreme looks like to be around 1810, 1820 on 1810 to 1800 even. Over the next, I would say, 2 weeks will be the extreme on the downside. Okay, I had to get rid of that troll. So let's go ahead and move on to Bitcoin. We'll start with the weekly chart here. It's interesting because Bitcoin just keeps climbing up. On a weekly basis, we have no upside objectives from a Fibonacci standpoint, but we're looking at a huge support under here. We printed down there last week. I know I talked about it quite a bit. 21.5. The low is 21.376. Kept saying this is the number that you're going to watch it support. That number now is at 21. Yeah, it's still hanging around here, 21,200 plus. But this momentum that's underlying here, we're above all the averages. We're starting to turn up. You just don't have any upside objectives. Let me just move this over to a daily chart here. And daily is suggesting that we're probably a couple days from trying to stall out here, but the upward momentum is pretty substantial. 23.7 is support. That is going up about 400 per day. So we're going to look at right around 24,000. So this is coming up pretty good. There's strong support underneath this market. Looks like it will last for at least 2 or 3 more days. So use that simple 10 as your support level on this market. Okay, folks, that'll do it for tonight. I appreciate everybody hanging out. Yeah, there's just no, somebody's asking just a quick question. How come no upside target? Does it take a while for it to come in? Yeah, actually what's happening here is there's not any solid patterns to project from. And we're in this little up, and I'm assuming you're talking about Bitcoin, but the channel that we're in is still positive, but there's just no targets that look like the upside of the grid would probably be it. So I didn't cover that. Let me just let me bounce over to that chart real quick, so I'll give you what that is. Yeah, the upside here is 25. We're going to go 25,284, 25,725 would be the upside targets there for those numbers. So hopefully that's helpful. Yeah, just looking at see if a couple comments here. Yeah, I got rid of the nasty bot that was out there. Yeah, anyway, don't say any significant comments I can see right away. So as always, thanks a lot. There is going to be some dynamics to this week. I have some things going on personally that have to be dealt with. And so it's very possible that there will not be a video on Thursday night. If there isn't, my plan is to do a live stream on Friday. Okay, so we'll do something like that to get that fixed. I'll let you know on Wednesday, tomorrow night or Wednesday, I'll let you know exactly what the rest of the week schedule is. So anyway, folks, thanks for watching. Appreciate everybody showing up as always, and good luck trading tomorrow, and we'll see you tomorrow night. Thanks for watching.